So we are going to learn about liquidity engineering today. Now, liquidity engineering is simply when the market performs an action of breaking the structure and changing the character at the same time. So when you find the market breaks the structure and change the character at the same time, this is what we call liquidity engineering. So this is the action of the market performing this certain scenario. The scenario like this is what we call liquidity engineering. So in liquidity engineering, we have rules, or we can call it characteristics of liquidity engineering. So when we say when we say liquidity engineering, we have characteristics. Now, those characteristics are what we are going to use to guide us to take these entries of liquidity engineering. Now, the first characteristics of liquidity engineering is we say liquidity engineering, it is called liquidity engineering only when it starts from 30 minutes to lower time frames. And this point, actually, I'm going to explain it more when we are in the topic of time frame coordination. In the topic of time frame coordination is where we are going to explain it. We are going to explain this point more so that you can understand more. But from now, just keep it in mind that liquidity engineering, we call it liquidity engineer from 30 minutes to lower time frames. And what happened from 1 hour to higher time frame? The 1 hour to higher time frame, we only call it reversal. Since because this action in higher time frame, we call it reversal. Since because the risk from this point to this recline point is very, very high. The risk from here to here, this is very, very high. So we cannot trade these entries from this entry type from higher time frame, because it will reward us very, very high risk. So we cannot lose a lot of money trading liquidity engineering in higher time frames. So we take this liquidity engineering as entry only from 15 minutes to lower time frame. And why 15 minutes and not 30 minutes as the first point at this first point? In 30 minutes, we don't take liquidity engineer as entry in 30 minutes, because at some point we can use this 30 minutes as our constant bias. Now, this point also, we are going to explain it more in the time frame coordination. So you just keep it in mind. So we take this liquidity engineering in 15 minutes only to lower time frames. Okay, so in 30 minutes also we can take it as entry, but at some point we are going to use this 30 minutes as our constant bias. So we cannot take entries at the constant bias. We only take entries in the situational time frame, and we can I mean, we are going to learn it more in the topic of time frame coordination. So bear with me in these 3 points that first liquidity engineer, we call it liquidity engineer only from 30 minutes to lower time frame. And from 1 hour to higher time frame, we call it reversal, where the market just reversed from maybe it was a bullish trend. Now the market changed to bearish. And we take liquidity engineer as entry only when we find it in 15 minutes to lower time frame. It can be 1 minute, it can be 3 minutes or 5 minutes, only from 15 minutes to lower time frame. You get this point?
Yes, sir. Yeah.
So after learning the characteristics of liquidity engineering, now let us see the types. We have 3 types of liquidity engineering. The first type of liquidity engineer, we call it simple liquidity engineering. The second type of, the first type we say simple liquidity engineering. And the second type, we call it compressive liquidity engineering. And the third one, we call it simple compressive liquidity engineering. So these are the types of liquidity engineering. Now, how are they, how do we differentiate them? Here is how. So in the simple liquidity engineering, the market only creates the break of structure, then the change of character. So this is what we call simple liquidity engineering, and this is where this is in a bullish market structure, and in the bearish market structure is where the market create the break of structure and the change of character, like this one. So how do we point the entry point? So in this type, this point here where the market breaks the structure is where we take our entry. At this point here, this is where we take our entries, where the market will come and sell in the bullish, where the market comes here at this point and sell. And the stop loss we always put in this point where we call it the decline point. You understand this?
Yes, sir. Yeah.
So this is the simple liquidity engineering, where the markets just break and change the character. So when you see this point, I mean, this action in the market, you just wait for the market to come to this break of structure where the market breaks. Then you take the entry there. Then you take your positions there. So what happened in the compressive liquidity engineering? So the compressive liquidity engineering is simply like this. It's when the market create a trend like this, then breaks. After it breaks there, the market change the character. So if you see this action in the market, when the market breaks structure here, after it breaks the structure, then change of character. But when this when the price come to break this structure, before the price coming to break this structure, the price created a trend, a small bearish trend like this. So this is what we call compressive liquidity engineering. In the bearish movement, you can see a movement like this. When the market come, create a low, then created a small bearish movement, then comes and change and break this market, this low here, then change the character. So before the market comes to break this this low, it created a small bullish movement, then it comes to break this low. After this break of structure, the market come and change the character here. So this is the second type we call compressive liquidity engineering. Now, where do we position our entry? We position our entry to that high of the small trend created before the market came to break the structure here. So at this point is where we place our entry points. So we wait for the market to come to this point and sell, or we wait for the market to come to this point and buy. You understand this point?
Yes, sir. The stop loss where should we put?
So the stop loss, we put it in this reclaim point here. The last high before the change of character is where we put the stop loss. Yeah.
Okay, okay.
Now, on to the third type, we call it simple compressive liquidity engineering. Now, in this type, the market performs create a high, then a low, then before coming to break the structure here, it creates a small trend like this, then it breaks the structure. After the break of structure of this structure, the market changed the character now. Now you can see the difference between the compressive and the simple compressive. The compressive,
Yes.
the compressive type, the small trend created is created before, the low. Before this low, the market creates trend. But in this type, in this simple compressive, after the low created, the market creates another trend before breaking the structure. Then
Yes.
the market changed the character here. Same applies in the bullish, bearish market structure, is where the market creates the low, then creates the high. Before coming to break this structure, the market creates a small trend like this, then the market breaks the structure now. After this break of structure, the market changed the character. Now, if you find this kind of scenario in the market, the entry point, we put it in the high, where the market breaks the structure. I'm going to explain why we put this entry here, and why in the simple compressive we put the entry point here. Same applies in the bearish movement. When the market creates this change of character here, we put this entry point in this point here. So the market will come and tap, then sell, also here and buy. The stop loss, we put it in the decline point there as normal. Now, you might be asking yourself, why in the simple, in the compressive part, we put this entry point here, and in the compressive part, we put the entry point in this high here. The reason is simple. In the liquidity engineering, we call it liquidity engineering when the market validates invalidate the trend like this. This is the break of structure and the change of character. Now, we put entry at the last break of structure. The last break of structure is where our entry point is. Now, in this case, the last break of structure, here was this one. This was the last break of structure here. Then the change of character. So we put entry here instead of this point because the market created the trend before this low. Now in this part here, we put the entry here because this is just one movement which came to break this point here. The market did not create any trend here before the market came to break here. I mean to break this point here. So I need you to understand these scenarios. There are two different scenarios. Okay. So I need you to understand this. So you can screenshot there.
Okay.
All right. So after learning the theory, let's go to the chart so that we can learn through examples. Now, now this is USD K, the 15-minute chart. Let me show you some of the entries I took myself using this concept of liquidity engineering. The first entry I took, I remember it was somewhere here. Yes. Look here closely. So the market here created this low, then this high, then this low here. It breaks this structure here. After this break of structure, the market came and changed the character. So look close here. After the market changed the character there, the market came to this liquidity point, liquidity engineering, and then tap, then the market buys. So this is a simple liquidity engineering.
Sir?
Yes?
Yes, sir. Yeah, continue.
Okay, so this was the first example. Let us find another example. Another example was here. You can see the market created a small bullish movement. The market breaks here. Then the market changed the character here. After the change of character, sorry, after after this change of character here, the market came back to this point, this simple liquidity engineer here, then the market sell.
Okay.
And the stop loss, you can put it there. Another example. So another example, let me see. I took one entry of liquidity engineer. Oh, okay. It was this point, I think. Okay, so look close here. This is one example of the simple compressive liquidity engineering. Now,
Okay.
as you can see here, the market created this low, then this high. Before this low here, the market created a small trend. When you put
Yes,
the line chart, you can see the trend here.
yes, sir. It forms low.
Then
Yeah.
the low, then the market breaks the structure here. After this break of structure, the market came to change the character. Now, we have two types of retest in the market. As you can see, the market can do this liquidity engineering. Then the market can come shortly and tap the entry point, then go. And you can find another scenario where the market created the liquidity engineering. Then the market can create some movement, then it comes, then it tap the entry. So this is, we call it micro retest, and this we call it rounded retest. I need you to keep that in mind. So we have two types of retest. We have a micro retest, and where the market just after the break of structure, the market can come with just one candle, tap and go. But another type where the market creates a round of movement before to tap the entry. So in this case here, after the market created this this break of structure and market change the character, we mark the entry point now. Now the entry point here is here instead of this point is here. We mark the body of the candle, not the wicks. Remember that. We mark the entry point at the body of the candle here. And as you can see, the market after the change of character, it came with just one candle there, as you can see. Just one candle, the market tapped there, then sell. So this is one kind of simple, compressive liquidity engineering.
Okay, sir.
So another example, let's find another example here. Remember, we take this as entries as only from 15 minutes to lower time frame.
Okay, sir.
From 30 to higher time frame, it's too risky to trade this liquidity engineering.
Okay.
Yeah. So another entry I took in this pair, it was somewhere. This point here. Now look close here. Sometimes it's very tricky to find this liquidity engineering, like this point here. Where is it? Yeah. Look close here. So the market created this trend here, this small trend. Before the market breaks this structure here, it created a small structure here. Did you see?
Yes, sir.
So after
Yes, sir.
this,
Yeah, I can.
after this structure here, the market came and changed the character.
Yes, sir.
So after that, after the market created the change of character there, we mark our entry point now. Now, where do we mark our entry point? At this point here. This is the simple, the compressive liquidity engineering.
Yes, sir.
Now, as you can see, the market came, made the rounded retest up to this point, and the market tap, then it buys.
Goes.
See?
Yes, sir.
Good. So another entry I remember, okay, let's find some entries. Let us find some entries. Okay. So this was a good entry here, but I don't know why the market did not tap this point here.
Okay.
Yeah, this was one of the good entry. The market came here, but it was supposed to be here. Now, in the coming lessons, we will learn about formations. So this market, this price came to this formation here. There was a formation here. So
Okay, sir.
We will learn about formations.
Okay.
Yeah, so that is. So we have another entry here. As you can see, this was the liquidity engineering. The market created this trend here, then change of character. The market came.
Normal. Yes, sir.
Then the market went long.
Good engineering. Yeah.
Perfect. So this is the entry type that we use sometimes. In the coming lesson, you will see we won't use this type of entry anymore, but we teach people how to take this entry, because liquidity engineering is not an entry type. It is just the action of the market performing the break of structure and the change of character. In this program, we are going to have only 3 types of entries, which we are going to learn in the coming sessions. But we teach people how to take this liquidity engineering because it is very important for people to understand the action of the market. And also we can use this as the entry point also. Let us look in the GBP USD some few examples, or if we can find some. I traded news today, the NFP.
Yes,
I
many of
traded
them
it.
take the trade. It's a kind of
Now,
everybody wins. Yeah, I saw the post.
So this was another liquidity engineering right here. After the market created this break of structure, then the market change of character. Then the market created a rounded test up till this point here. After the market tapped that area, the market went long.
Yes,
Okay, we have another entry point here. Look closely. Now, this is the entry point here, as you can see. After this break of
yes,
structure, the market created change of character. Then the market came to this point and buy. Now, this is what kind of liquidity engineer is this?
simple components.
Yeah, this is simple compressive liquidity engineering. As you can see, the market created a trend before coming to break this high here. Now, we could put the entry here only if the market closed at this point. If this low here came to close this point below here, we could put our entry point here, but it did not close here, so we stick to this high here. As you can see, the market came and tap and went short.
Okay. Body breaks below means we should consider this one.
Yeah. If the body closed below
Below this
here,
one.
yes, below here, then we could consider this high as our entry point here. But the body did not close here. So as we learned in the previous lesson about the type of breakouts, we only use wick to body breakout only.
Yes, sir. Yeah.
Yeah, so this was the good entry there. The last example I can show you. Find another example. Okay, here is another example. As you can see, the market breaks the structure here. After the break of structure here, the market came and changed character there. After the change of character, the market came to that liquidation point, tap, then went short.
Yes, sir.
So that is how we take liquidity engineering. So you have to consider those types of liquidity engineering and those characteristics that I gave you. That is all about liquidity engineering. So I need you to do, as usual, the assignment. I need like 15 examples.
Okay, sir.
5 5 example of simple liquidity engineering, 5 of example of compressive, and 5 example of simple compressive.
Okay, sir.
So after that, I think tomorrow again we are going to have another session. Now, tomorrow's session we are going to look the scenarios where we mark the liquidity engineering as our entry point, but the market come and break this point. So how do we act in this scenario like this? So tomorrow we are going to learn this topic on how to
Okay,
act
sir.
in these scenarios.
Okay,
So
okay, sir.
so I hope you got something today.
Yes, sir.
Yeah, so I I checked your assignment, the last assignment. You did
Okay,
well.
sir.
You did well.
Yeah.
So it just the matter of practice.
Okay, sir.
I'm sure you are going to do something you're going to do wonders one day.
Thank you, sir. I'm glad, sir. I am here.
All right, so after that, I wish you a very, very good night. I know it's late there in India.
Here,
Mm.
here is almost 11, 17.
Which part of India are you?
I am from Tamil Nadu.
Oh, I never heard of it.
Do you know about Tamil Nadu, sir?
No, 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 no. I never heard Tamil.
Yes, Tamil. Yeah, we speak
Uh,
Tamil.
oh,
The oldest language.
okay. I hope one day I can come there and visit you.
Yeah, sir.
All right,
Just a
so
message.
all right, so I wish you a very good night.
Okay, sir.
All right.
You too, sir.
Okay, thank you very
Very
much.
good.